Welcome to another episode of Risk Spotlight's weekly operational risk news update. I am Emily Jones, and I will be sharing insights on key news updates from last week. These updates are based on content from the Risk Spotlight portal, which is the world's first forward-looking operational risk content service. The first update is from UK's financial regulators on AI regulation. The Financial Conduct Authority, the Bank of England, and the Prudential Regulation Authority have issued their strategic approach to regulating the use of artificial intelligence, AI, in the financial sector. This comes in response to the UK government's white paper on AI regulation, which was published in March 2023. The regulators have adopted a principles-based approach rather than introducing prescriptive new rules. They believe the existing regulatory frameworks are suitable for addressing the risks and opportunities presented by AI, as long as they adapt to the speed, scale, and complexity of AI technology. The key principles outlined in the government's white paper include safety, security, and robustness, appropriate transparency and explainability, fairness, accountability and governance, and contestability and redress. The regulators have mapped out how their current regulations, such as the FCA's Principles for Business and the PRA's Rules on Model Risk Management, can address these principles. Over the next 12 months, the FCA plans to focus on areas like testing and validating AI models, strengthening accountability, and using AI to enhance its own regulatory functions. The PRA will also explore potential areas for clarification within its regulatory framework and may establish a new AI industry consortium. The next update highlights a warning by SEC Enforcement Director Gurbir Grewal on the risks of AI washing. This involves companies making exaggerated or misleading claims about their use of artificial intelligence. Grewal noted that AI washing has the potential to mislead investors, harm consumers, and violate securities laws. He emphasized that the SEC is closely watching this issue, with the chair and other senior officials also highlighting the need for companies to provide specific, truthful disclosures about their AI capabilities and not rely on vague or aspirational statements. This warning follows enforcement actions where the SEC went after investment advisors for making false claims about their use of AI, resulting in penalties of $225,000 and $175,000. Grewal indicated the SEC will take a similar approach to holding individuals accountable, looking at whether they knew or should have known about the misleading statements. The next update covers review by the consumer rights group Which of the online banking and mobile apps of 13 major UK banks, finding notable security gaps. TSB and the Cooperative Bank received the most criticism. TSB's app, criticized for insecurely storing login credentials, scored the lowest. The Cooperative Bank's app lacked two-factor authentication for new devices and allowed weak passwords, increasing the risk of account breaches. In contrast, NatWest and Starling led in online banking security with scores of 87%, and HSBC and Barclays topped mobile banking with 78% and 74%, respectively. The next update covers a new cybersecurity report by Performanta, which reveals that cybercriminals are using developing countries with weaker cybersecurity as testing grounds for ransomware before attacking wealthier nations. They first infiltrated systems in countries like Senegal and Chile, and a group known as Medusa targeted businesses in South Africa and Senegal before breaching 99 organizations across the US, UK, Canada, Italy, and France. These criminals exploit the rapid digital growth in these regions, often locking users out and demanding ransoms before the breaches are even detected. The next update is from the 2024 Cyberclaims Report, published by U.S. insurance provider Coalition. The report flagged a significant increase in claims in 2023, with 56% of all claims originating from email-based fraud like business email compromise and funds transfer fraud. This highlights how the email inbox has become a prime target for threat actors looking to steal funds. Interestingly, while overall claims frequency and severity increased by 13% and 10% respectively, the report saw a 54% drop in ransomware severity. However, ransomware frequency was still up 15% and severity up 28%, with the average ransomware payout exceeding $263,000. The next update on rising risk of heat waves in Europe. According to the European Union's Copernicus service, and the World Meteorological Organization, Europe experienced unprecedented extreme heat stress days last year. In July 2023, 41% of southern Europe faced severe heat stress, a record extent. Spain, France, Italy, and Greece saw temperatures above 46 degrees Celsius for up to 10 days. Heat-related deaths in Europe increased by about 30% over 20 years. March 2024 was the warmest month on record globally, continuing a 10-month streak of record heat. Operational risk management teams must proactively manage these risks with flexible work policies, better workplace conditions, infrastructure resilience, and employee training on heatwave risks. The final update is on UK's Financial Conduct Authority, FCA, publishing new guidance to help financial firms comply with the AntiG Greenwashing rule that will come into effect on May 31st, 2024. This rule is part of a broader set of sustainability disclosure requirements the FCA introduced in November 2023. The anti-greenwashing rule requires all FCA-authorized firms to ensure that any claims about the sustainability characteristics of their products or services are consistent with the actual sustainability features and are presented in a fair, clear, and not misleading way. This is to prevent firms from exaggerating or misrepresenting the environmental or social impact of their offerings. The new guidance provides more details on the FCA's expectations. It states that sustainability-related claims should be specific, substantiated, and proportionate to the product or service. Firms should also avoid vague or ambiguous language and ensure consistency across all marketing materials. And that wraps up our overview of the latest developments in operational risk from last week. For a deeper dive into the subjects we discussed and to explore more on emerging risks, I encourage you to access the RiskSpotlight portal if you're already a subscriber, or visit riskspotlight.com to register for a free trial. Thank you for listening, and join us again next week. Stay vigilant and navigate those risks effectively.